Hey traders, it is Thursday after the close and I want to do a video on one of my top patterns that I use for day trading profits. I hope you had a good day. The pattern that I'm about to go over works on any time frame, but I prefer to play it on the 15-minute time frame in the afternoons. I've talked about this pattern before. If you are part of the Facebook group, then you can search for it for a video that I did on it under the Black Room playlist, or I'm sure you can find it on our blog. So I'm not going to go into too much detail here, but I just want to say this. In theory, only patterns with no major flaws should be playable. But the problem is such patterns are rare, and limiting our trading to patterns that are picture perfect would virtually guarantee missing out on most days. So what do? If you can't, if you can only play patterns that are picture perfect, which is what we're supposed to do, and these patterns come once they come up about once a week or so, what do you do the rest of the week? What do you do the other 4 days of the week? Do you not trade? Well, there is another concept that solves this issue, this problem. And the concept is called the secondary sign of strength or secondary sign of weakness when playing short. We look for a secondary setup on the stock that sort of fixes the problem. You might be wondering, what am I talking about here? But it's really simple. If a stock has a problem, what are some of these problems? Or if a pattern has a problem, what are some of these problems? Well, maybe it's extended. Maybe the timing with the market isn't good enough. Maybe the pullback, if you're playing a pullback type pattern, was too deep. Maybe it doesn't have enough reward to risk. Maybe it's showing relative strength to the market when you're looking to play short, or relative weakness when you're looking to play long. Any of these issues would apply. Maybe it's not, and this is the most common issue that I see with patterns, with day trading patterns and swing trading patterns, is they lack multiple time frame alignment. That's the number one issue on most things that I come across. So again, what I do is I don't just discard it, especially if it's a gapper, if it's a really good gap, and I know there's power behind that stock. I don't just get rid of it. I watch it, and I wait for a secondary sign of strength or weakness. I like to play short a lot more than I do long. So let me show you the pattern that I came across today, and traded in the Black Room with, we have like 700 people in the open house. So I don't know how many people took it, but it was perfectly fine to take because it was very, very liquid. It did almost 10 million or 9 million today and no spread, and it's the ELF. So here's the sell setup, short, but the truth is I was already in it from here. So there was a call on it. To tell you the truth, I had already played it twice. Let me show you the first play real quick. This was an official play also in the Black Room. If you're part of the open house this week, then you know that to be true. And here it is. What a picture perfect pattern. 1, 2, 3 at the open on a pretty bearish gap. This was also, I know you might think I'm now really pushing the envelope here. This was actually also an earnings play for the Strategic Swing Trader program members. So I was in it from the night before, basically. But that's another story. We're not going to talk about that, why I was in it already as an earnings play. So as a day trade, it's set up short right at the open. Perfect. Out half at 60. I don't know where 60 is. And in the back half at 50. So here, that's 60. And in the back half, I don't know where. But somewhere here, basically, the whole thing. 60 and 50. So average 55. My exit. Perfect. From here to there, and then, done. And then it's set up later on as a sell setup. I think it was on the 5-minute chart. And here it is. But notice it was extended. Now, I like this gap so much that I took it. Right here, short under 1083. Got in it, and triggered, and wouldn't follow through. So I killed half over 11, which was this candle's high. So killed half right here. And then I stayed in the back half. And then in the afternoon, let me show you on the 15-minute chart what it did. Triggered short, but it's extended. Extended means it's far away from the 20 MA. See this? That's far away from the 20 MA. So not yet. Look what it did now. It gave me a line in the sand. You see this green bar that it printed? That's a clear line in the sand. So now, if we break under this, it's a short. But I said, wait a second, it's still extended. Let me go ahead and do it instead of under 58. Let's go ahead and do it under 55. So short, okay, under 55, stop, 60 something, 62 maybe, 64. Oh no, it's 81. So under 55, stop 81. Okay, and look at the beauty. So here it is, and the short. So the point is, and actually before I tell you what the point is, let me show you this other pattern that Ifan, who is my co-moderator in the black room, called out also. And here it is. Again, the initial sell-off, the base, the bleed. That's why I call this pattern the bleed, because it bleeds sideways into the moving average, and then the breakdown. Look at that play. I mean, amazing, right? Pretty amazing. Look at that move. So again, what it is I like to get, here's the pattern, just so we're clear. You get the initial sell-off, you get the rally, you get another minor sell-off. It doesn't take you all the way to the lows, because then it's, you know, it's gone, right? And then you get a base. And then when the moving average catches up, doesn't have to touch it exactly, but if it does, so much the better, you get a breakdown. That's the pattern. So it's a breakdown play inside of a larger sell setup. Why was this sell setup not good, let's say? Well, extended, whatever the reason may be. The timing with the market wasn't good. Maybe the multiple time frames weren't yet in alignment. So if you pass on the first entry and it sets up as a base breakdown later on, that's the pattern. Some people confuse this with, let's say, a breakdown like this one, which I know worked, AKBA. You know, kind of a base. That's a sell setup pattern. That's not the same pattern. When it bases at the highs, so it drops, rallies, bases at the highs, and breaks down. That's not the same pattern at all. Most of these are low odds. In this case, it's a rounding top. It's okay to do it when it's a rounding top, but if it's a flat base at the highs, it's almost always fails, goes back up. So the pattern is the sell-off, the rally, another sell-off, not a big one, just enough to prove the bearishness, and then the stock goes sideways rather than recovers. If it recovers and goes back up, then you know it's too bullish. But if it actually drops a little bit and stays at the bottom, then that's the pattern. So, and I find it on every time frame. Again, my preference is to play it on the 15-minute chart in the afternoon. That's what I like to do it. That's the time frame that I like to do it on. But if it sets up on a smaller time frame, great. Why not? So that's about it. We're kind of busy now because it's earnings season in the black room. We have one more day one more day where you can stop by and check us out if you're interested. We have an open house this week. Tons and tons of plays. I did the Dropbox also at the end of the day. This was just right at the end of the day as a climactic short. I mean, that is a beauty. Look at the run up on the daily chart and then the run up on the intraday time frames. Wide range bar, narrow range bar. I talked about ENDP yesterday. Just yesterday I did a video on the well, this is the same. ENDP was better, but this is the same setup, and then bam, big drop. I took it at 11. This was the low, but I took half at, that's 34.08 was the low. Took it at 11.5, and the front half at 52. So right here somewhere, 34.52, and then the back half at 11. The entry was under 74.95. Here's the, let me show you. Here it is. That's the black room, right? So trail the back half to 34.11. The front was to 34.52, right? So again, lots of plays on ELF, 3 different entries, Dropbox, 1. I don't know what else. I don't remember at the moment, but lots of plays. There were also a lot of good setups at the open, oh so many. But the problem is they were really, really spready stocks. I remember the NTES had almost a picture perfect pattern that I mentioned while I was moderating, probably on the 1 or the 2-minute time frame this morning. There it is, but again, very spready, and it ended up, I mean, here, let's look at it on the 15. It ended up crashing. The CPA was a beautiful gap, and then at the open, or not quite at the open, but shortly after, loved the short. Afternoon, beautiful, but 40-50 cent spread. I mean, I don't know how people play this stuff when it's spready. Sale this morning was a picture perfect pattern, also kind of a W pattern. There it is. Here's the W, just so we're on the same page. Okay, but also spready and got right to target, but really spready. One more was the CVNA, I think. Yeah, the CVNA this morning also was pretty good. And there, look at it. Look at that move. How big is this move? I mean, from low to high, it's like $6-7. So that was the play. It was on the 1-minute chart, actually, the one that I pointed out this morning, but too spready. And I don't like spread. I don't like spready stocks. There it is. It's a pullback pattern to the gap fill, to the rising 20 and the flat 200. What's not to love? Perfect. With a narrow range bar and a bottoming tail and the COG. These are all considered amplifiers in the pristine method, according to the pristine method of trading. So it had it all. I mean, it was really picture perfect. The problem, again, I don't like to play spready stocks. I'm really conservative, even though some might think I'm a very aggressive trader and I trade, I'm a very active trader, but I'm actually very conservative. I don't do anything where I feel I can't control the risk. If I feel the stock is too jumpy, too spready, then I immediately back off, even if the pattern is good. Now, if it goes in your favor, no problem at all. But if it goes against you, then you're going to get hurt really bad, and it's going to take you out of the game, for the day at least. Crisp this morning, I'll just show you this one last thing before I end this video. Crisp this morning, we were talking about it. I don't know where the pattern is. Oh, there it is. The fall. I mean, as a long. Somebody emailed me and lost 3 times what they were supposed to lose. Why? Because when they took it, they said it wasn't spready, and then the spread opened up when it went against them. Well, that's why I don't touch these stocks, because the spread might disappear for a minute or two, and then it opens up again. So if I know the stock is wild and spready and jumpy and thin and illiquid, then I just back off. Sometimes when I'm 100,000% sure about it, or that's how I feel, when I feel that way, then sure, I'll do it. Because again, the spread is a problem, but really mostly only if it goes against you. So when I feel trading is an odds game, you know, there's no such thing as certainty, or you know that, oh, this pattern will work 100% of the time. There's no such thing. So for and I treat it like that. I treat it as a game of odds. So if I see that there's a possibility that I can get hurt, then I just back off, because I know it's going to mess up my day, and I won't be able to mentally, psychologically be able to probably come back from it. So I don't put myself in a position to lose more than I want to risk, more than I want to lose. But again, sometimes if I feel very, very sure about the pattern, okay, I'll do it, but it's really very rare, and it's an exception to the rule. When I look at some of the risk that novice traders take by chasing the high flyers, the Teslas, the Amazons, Googles of the world, Nvidias, I don't touch these stocks. Not because I don't know how to trade. Obviously, I've been doing it for a long, long time, but because I treat it in a I treat trading in a very, very professional way. Very, very, very professional. All right, and I hope you do the same. With that, I'm going to end this video. I hope to see you tomorrow at the last day of the open house. If not, we'll talk sometime soon. Take care, everybody, and happy almost Friday.